The only way you'll be able to pull out of me a rating of A for any trade is if it meets the following criteria: technical, statistics, geometrics, and a fundamental catalyst. Well, today a catalyst was announced right as a massive signal fires. During the after hours trading, price pushed up to officially break out of a key level. Welcome back to the channel on this Taco Tuesday. This is ARCa, and let's dive into ticker symbol NVOS. Let's kill them, team. What is up, you guys, and welcome back to the channel. Let's go ahead and dive into ticker symbol NVOS. As you can see here, the Black Sheep Trust files partial assignment of a $1 billion gold-backed bond to Novo Integrated Sciences, right? So this is the catalyst that actually came out in the after hours, and price action officially started its key breakout, right? So this breakout that I'm speaking about is actually from now I think the third, yes, it would be the third formation out of a very, very complex breakout, right? So let's go ahead and take a look at those breakouts right now, right? So please remember that we had several formations here, right? These two yellow lines are signaling here a descending broadening wedge, right? We have this as a falling wedge right in here, right? So we already got that identified, and we're already meeting two of the targets, right, that it has to provide, and the last target it has to provide would be up here at 139. And following that, we're also breaking out of this channel. Let's see, there we go, of which we already got that breakout retest, and then we got a continuation to the upside. Okay, let me see here. Now, please remember that the target here for this channel would be located, by taking the trend line from the top side of the very bottom side. You apply it to the top of the formation, or the breakout zone, which was right about here, and you're getting a target of about 161. Right, so that 161 could be the very top side for this formation here. Now, I will point out that there is still one more target to reach, right? So that one more target would be the back of the triangle, right? So right in here. Let me just go ahead and get this highlighted so that you can see exactly what I mean, right? So from the back of the triangle to the very lower part of the triangle, you actually take a trend line and then you apply it to the breakout point. And here you can actually see that the target that we're getting here would be roughly about $1.39. Now, the range for that $1.39 is actually 142. Okay, all right. So now you know that. Now you know that. Whatever's happening there, it's looking pretty good, right? So let's go ahead and observe here what is really happening, though, because this is the first indication of a breakout from the larger formation, right? So let's just go ahead and get rid of all of this stuff here, so that we can actually clean it up and see exactly what's happening, right? So let's just go ahead and minimize all these colors here so that we're not distracted completely, right, by all these lines everywhere, right? Just like this. And yeah, I want you to focus in on this formation, right? So this is the broadening wedge, okay? Yeah, it starts right here, and it comes all the way down here. So this is the descending broadening wedge, and you can see here that we're starting to break out, right? So this formation here has a take profit located at $1.72 per the playbook rules, right? This is usually how you trade this formation, right? That's the take profit target. All right. So now, but what could happen to price action in the short term? Well, I can't promise that there's going to be any FOMO here, but the catalyst was announced in the after hours trading. So not a lot of people trade the after hours, right? So what can we do if there is no FOMO? Well, naturally, the asset moves at an average true range of 21 cents. So if we were to fire off a 21-cent top from the 130 that we closed at, that would put us at $1.51, right? So that would be right here, right at the 1 fib. And if we did get that, there is even room to just push into the 161 and then reverse, right? So we're going to be looking at a 152 to about a 161 top before a reversal here, or a pullback, to start validating one of two zones, the 139 to 142, or the zone that we've been trapped in today, 130 to 132 at the NVOS 618. I will say that we are currently in the golden pocket, right? So the golden pocket is actually a very bullish area for us to be in. So I'm just going to go ahead and kind of color it something else so that we can identify that, right? So here you go. The golden pocket located between the NVOS 618 Fibonacci ratio of $1.32 and a not 382 Fibonacci ratio between at 120. Sorry. Right, so price action today came right back down to the low of about 126, which is right at the 0.5. And this is what we've been talking about the whole time, right? We've been talking about resisting from the 132, coming back down to start the bounce process from the 0.5, right in the golden pocket. So there is a possibility here that we may actually be able to get that top side. This is going to be great, right? Nice. So let's go ahead and move on to the next chart here, right? So yeah, this is very nice. Okay, so now we're starting to combat the previous day highs, right? So we have two of them clean, right? So 12-hour candle, yeah, I get it. We have a little bit of a tweezer top there, and if we need to come back and validate some prices, sure, there could be a chance here of getting back down to the 12-hour time frame SMA 5 at around $1.25 before a continuation to the upside. In that case, it would just be a bull flag, right? So we can then see what the potentials are. Now, just like we mentioned in the other chart, it's very similar on this side too. So there is a take profit target from the center of this falling wedge, right? So that would be this right in here. And that would be the center of this formation. You apply it to the breakout, and that gives you that target of about 139. Okay, now the top side target of this formation leads to that 162. Which is very curious because 162 actually matches with the 161 here from the take profit of the larger blue channel that we had, right? So very, very interesting things there. All right, so now I want to just go ahead and keep updated here with the signal that fired off on the 3-day time frame for the historical volatility versus momentum backtest, right? So this historical volatility versus momentum fired off on Thursday market close and opened up the signal completely fired on Friday, and that consists of volatility contracting from critical and stochastic momentum at a massive incline here. Okay, so this is completely positive. You know what? Let's go ahead and finesse the data here. So let's do, instead of a 3-day look back, let's go ahead and make it as close as a 1-day look back with a smoothing factor of 1. Look at that. Stochastic momentum right now has a complete pivot towards the upside. Not that it didn't before. Just like this, it's already pivoted towards the upside. We're getting contraction here, and that is the criteria for the backtest, right? This entire backtest here, right? These are all of the samples here taken from any time that volatility has expanded into critical expansion, then started a contraction phase paired with an upside of stochastic momentum. So that's currently what I'm observing here. I have all of the data, right? We actually calculated 24 iterations, of which 18 were guessed correctly to the upside. That gives us a 75% probability. Now, we do have, on average, the upside thrust, or your mean, it's coming out to 175.54% over the span of about 26.17 days. This fired 2 days ago, right? So, so I did calculate, right? I did calculate the standard deviation, which is 68%, where 68% of the results land. That comes out to 190.56%, otherwise $3.59. The average upside thrust, being your mean, comes out to 342. I did also calculate the upper bound of the first standard deviation, the second, and the third, right? So those targets are pretty massive targets. I feel like they're a little out. They're a little out there right now, but in case FOMO does come in, these will become instantly pertinent, right? So that would be a 574 at the upper bound of the first, $8.10 at the upper bound of the second, and 1044 at the upper bound of the third standard deviation. So now if I add here a reversion variant, I want to see what the top side, okay, nice, yeah. So the top side of the reversion variant, meaning that the mean from the 3-day time frame, the price is set to $2.07. So $2.07, a 2 standard deviation multiplier from that target would be around 377, which matches the 68% of the results, being at 359. Right, and this being right over here at about 383 to 359. That rhymes very well. Okay, so mathematically speaking, everything is kind of set to a pretty nice average. So this signal fired off, and it's still active. Okay, so it's looking very good. Now, let's go ahead and just take a look at the RSI here, because I want to see how far of a downside we can get. Oh, right. So remember I was talking to you about a quick downside here that we could face to 125, where the SMA 5 is on the 12-hour? Well, that's currently being displayed here on the yeah, it's currently being displayed right on this thing on the on the RSI right over here. Sorry, I was looking at the wrong screen. Okay, so the why I mean this is because this is the bi-hourly time frame, and the RSI signal representing price would essentially come back down and validate a support from the SMA 14. But why would it happen? Well, there are two reasons why it could happen. Right now, the signal being the cyan line and the moving average, the SMA 14 being the pink line, are both currently sitting at the gravitational zone of the bull weakness percentile. So you could actually get a bounce here from gravitation and the SMA 14 for a continuation to the upside. And it looks like the 30-minute time frame is already suggesting that downside there. So this downside here from the immediate short-term time frame being the 15-minute into the 30-minute will cascade into the hourly, into the bi-hourly to find support here and bounce. And from that area, this would actually bounce to the upside. And then guess what? The 4-hour time frame is already in the gravitational zone here, so that could get a bounce to the upside. Not bad at all. Okay, and hopefully before the 12-hour time frame makes its way down, this can hopefully just kind of reject here the gravitational zone from this side here, because that could pull price action to the downside. I'm going to start feeling a little more comfortable about talking the daily time frame, the 3-day, and the weekly time frame a little later. As soon as we can get some more validity here from the shorter time frames, then we'd be good. But yeah, team, I think that this play, it has all the characteristics for an A trade. All right, so I'm just kind of putting it out there like that. And please remember, team, I'm diminishing the seats here. They're coming down little by little as people fill them up. The ARC Masters course is actually something that I'm going to do for the last time here, as I've already done. Actually, I'm on track 3, and I'm going to complete 4 tracks total. For the 4th track of students, I've opened up 30 seats. There's about 14 or 13 left. And I will be starting in January. And that's going to be the last time I do the 16-week mentorship program. Okay, team, so take advantage of it. Get a good start to the year. And make sure to come swinging in the trade. All right, you guys? So, yeah, I think this is a pretty good place to leave off. If you have any questions, you know where to reach me, okay, team? But, yeah, everything is looking A-okay from my perspective here. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 never. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well. A very, very good rest of your night. And I will catch you at the bell. Mañana. Adios, team. Yeah.